I got Mike here. So what a week in the books there, buddy. That Opex, most time you get at least one day where you have a massive sell-off, but oh no, we did not. And I'm going to show you what happened this week. All right, we're going to hear from a good, interview that Jim Carson did. He manages the volatility fund and stuff, and he'll talk to you about it because he was right on the money of what was going to happen. If you listen to the last interview, and it's really short that I found with him. And also, Jerome Powell spoke Friday. I'll go into that one. Don't go watch that, please. It's time you will never get back in your life. But I'll talk about what happened because the market reacted to what he said, not just in the stock market, but actually what is going to go on about rates. And I think, to me, he tipped where he's at. He tipped his hand for sure. There's no doubt about that. And then something else that is happening, because somebody had asked about a particular stock, and this is something I keep the members updated on and stuff, and we talk about. But it's like, something that's happening right now to a lot of stocks, all right, especially software, technology, things like that. So I'm going to show that to you as well. I think it's pretty important. But I will say, whatever you want to say about Warren Buffett, boy, he still got the juice. Because I told you in April that he had talked about he's going to increase his exposure in Japan. And boy, just look at the Japanese index, for crying out loud. That thing just took off in April. Big money hurt him, and they flooded in too. They're pushing those stocks up. The same can't be said for China. One big reason is their property market over there. Of course, remember, 70% of their people's assets and stuff and money are in the properties over there. So apartments, houses, things like that. And you can see, boy, new starts down, completed houses. I mean, that since 2020 has just been doing nothing but declining. But more importantly, look at the money. Got to follow the money, right? I mean, this is investments. And you hadn't seen a positive month since February 2022, and look at what happened in April. I mean, yeah, that's in the negatives there. So yeah, not good, right? So that doesn't help them. And of course, what's happening to their stocks, right? I told you this when I showed you the Buffett chart a couple weeks ago. I said, here we go with this QE crap again. And because they talk about it, every time they do, the stocks pump, then they sell back off. Well, right now you got the American stocks and the S&P, which really ain't been doing great compared to like the QQQs. What about the S&P? Has been outperforming the Chinese index, right? And so even when the tech, like Bob and all them reported their earnings, it just wasn't where people thought it was going to be. And that QE only takes you so far. So China might be an interesting place right now because nobody can make heads or tails of it, right? And so, that leads us into Jerome Powell. And Jerome Powell spoke. And look, I got no fault for somebody who uses papers, but I don't understand this, man. What's this dude got, a thing of papers for? And it was pretty obvious that they had told him what the questions were going to be because he literally flipped the page of the guy asked a question and he just starts like reading off the paper, and there's his former counterpart, an ex-Fed president. He just rattling it off, no problem. Like he knows, economics and stuff like the back of his hand. And Jerome Powell, who's been asked the same questions for the last year a million times, he still has had those papers, man. Where he's like, I'm going to see here, But when it's all said and done, what I got out of it is the fact that he pretty much, I don't think he would vote for another rate hike. That's what I got out of that. And I wasn't the only one because the market said as soon as he was done, they went, yep, we're going to go ahead and lower this back down. And now they went down to like a 17% chance of another rate hike. Now, the other Fed presidents, because one of our members is good enough to share some kind of tracker he found for Fed presidents' comments, they're torn. They're 50-50 right now. And so I don't know which way they're going to go. But if it's up to Jerome, they're not doing any more rate hikes. And because that's what I got out of it. Let me know in the comments what you got out of that from him. But that's what I got out of it. And that leads me to what Jerome said months ago, which was what's the worst thing that can happen with inflation. Not that they can't bring it down, that it gets entrenched in so many different ways, right, in the system. That people, especially us, the consumer, just absolutely just get used to it. And companies continue to understand that we're used to it and we're just going to keep spending. So they continue to raise the price over and over and over. And, I've talked about that for a while, right? And I think that's what's happened. Let me know in the comments if you disagree. But I found this interview the same day, right after Jerome got done talking, they did this interview. And I'm not the only one seeing it that way.
The fact that companies are boasting about their pricing power and that they can raise prices without losing sales is telling us they're just not getting a lot of resistance from consumers. And I think that's for two reasons. One, first of all, consumers are feeling pretty flush. Their wages are going up. Job growth is very strong. And number two, I think there's an element of them getting used to it. If they were used to 2% inflation and the supermarket raised prices on them, they might say, whoa, I'm going to, shop around a little bit. And that's not happening. And, going over some of the Fed speak that Steve was just referring to, the thing that I find quite striking is that pretty much everybody, the hawks and the doves, agree that inflation is too high right now, and it seems to have stalled out. We went from 9% to 5% on the headline inflation rate, and now we're sort of stuck there. The core inflation rate is, moving along at 4 to 5%. Not much evidence that it's moving down.
And if you're liking this video, guys, please hit that like and subscribe button. That will be the thumbs up right below the video there. Just go ahead and hit that for me. I sure do appreciate it and all your support. And if you like this kind of content, think about subscribing. And how many times have I told you about that? On these earnings calls, they're still saying they're going to raise prices in 2023. And the reason why is it's pretty simple. In America, unlike other countries, like, say what you want about China, any other country, like they save money. They save money. It's a powerful thing. In America, our own government doesn't want us to save money. They want us to spend. And at least half the country, if not more, these people, I know them, have no clue what they're doing with their money. And they feel like as long as they got a paycheck coming in, it's going to come in forever because I would never get laid off and lose my job, right? And so they will spend and live and try to keep up with the Joneses. That kind of, if you ever heard that saying before, not these Joneses, but I mean, like the rich, mega rich Joneses. And they'll try to keep up with them, go and being house poor, buying a house they don't need, driving a Mercedes that they sure can't afford. But again, they live paycheck to paycheck to paycheck. And that's why it's not a problem until it is, right? And that's why, again, the company's like, we'll just keep raising prices. It's all good, baby. That's the way it is. I mean, that's why you see McDonald's new 52-week highs, Burger King, their prices are through the roof, new 52-week high. All the hotels, anywhere we travel. That's what those car dealerships like. We're going to charge you a $10,000, what was it, market adjustment fee, and people paid it. Really? Yes, they did. Right? And so that's just the way it is, right? So now that brings me to an interview with Jim Carson. And again, I try to bring you these when they come out and stuff. He's pretty good at this stuff. And he predicted what was going to happen, and it's happening now, right? That's what you do. You find people that start having that good track record and say, all right, cool. Let's see what the next prediction or what he sees happening. And this kind of describes what's going on right now in the market.
Yeah, last time you said melt up could be a very real possibility. And then as we melt up, eventually the Fed will come back, or the central bank narrative as a whole, and kind of push this market back down. So where are we on that process? Because it feels like we're in melt-up mode.
So last couple of days, we've got a couple Fed speakers come out, right? What are they doing? They're trying to sell those calls again, right? That's kind of what we talked about. We mentioned several months ago that February represented a window, but that if it didn't happen there, that May was kind of the next spot. Why? Why Feb? Why May? They sit at monthly Opex a month before a big quarterly Opex, right? You harkens back to Feb to March 2020, right? We've talked about this. That big decline started the day after Feb Opex, ended the day after March Opex. Not a coincidence. Why does that happen? Ton of open interest in these quarterly expirations, right? And particularly with skew higher, the distribution is fat-tailed, right distributed, right, when you're in that type of an environment. And here we are going into May Opex, another dangerous window, right? I would have liked to have seen a bigger squeeze. Yes, the last couple of days we're starting to see some momentum going again, but we were really hoping for a 4250, 4350 S&P, squeeze the shorts, change the narrative, get people more positive. We haven't quite gotten that yet. The last couple of days is kind of interesting, though. The other thing that will make it tougher for a decline is all of the bank problems, plus all of the ceiling, lifting the ceiling issues have created a higher skew, both in the indexes and single names. That itself is reinforcing kind of this upward momentum with these Vana and charm flows that we talk so much about. If we continue to squeeze here for a day or two, though, there are a lot of things that you mentioned, breadth, right? That's not a coincidence. These are how these things tend to happen. You get a disconnect between different parts of the market, those tied to the more kind of flow structural pieces, the bigger stocks, and the smaller ones kind of disintegrating underneath the hood. Vol is going up into this market rally the last couple of days. That's
one of the things you told us to look for.
100%. We've had it only 2 days now. Really, the back of the curve is starting to move higher because we're just sliding to too low a vol. Again, something to watch. We're having a hard time, even though we're getting a squeeze. And you're seeing that both via move away from quality, which we've been seeing recently, a couple of other internal things, but we're still not getting that momentum above the 1.5 standard deviation up in the 20-day, this real push, which is another warning sign. It's another thing to kind of, especially here in this window, we should have seen a little bit more. So May is a very, very unhealthy month, right? Especially when these little pieces start coming together. Liquidity dries up in the summer. This time is particularly bad too. Why? We're about 18 months after interest rates started increasing. That's about what the lag is, right?
Okay.
From interest rate policy working through the economy. We see that in terms of buybacks. We see that in terms of real estate re-rating, right? We see that in terms of venture capital, private equity, and collateral re-rating in those areas as well.
And if you don't know what a melt-up is, it basically refers to a sudden improvement in price of securities due to investor sentiments. Melt-up occurs when investors flock into buying assets based on greed rather than fundamental improvements, i.e. the AI bubble, right? And so, and of course, I think we can agree that's what's been happening for a lot of these stocks. And the other thing that happened, not just that, and we talked about this when I had to tell the members of the other, look, daily ranges, none of that stuff works. Like max pay, none of it works when you have gamma squeezes. And what happened last week has been happening is you have the NASDAQ daily call volume spiked, going as basically it hadn't been that high since 2014, right? And we've had these gamma squeezes before. We've seen it. You see right here as I zoom in. That's what I'm talking about right there. Go all the way back to 2014. And so what happens is, for those who are new or whatever, when you have these massive call volumes, and I'm talking a lot of these are these zero DT options. Some of the people were nice enough who watched the videos to mention this last time in the comments that you have these massive blocks of zero DT options being bought, most likely institutions. So I'm talking about massive blocks. And that forces the market makers to do what? They're the ones selling the calls, but then they got to go be forced to buy the stock to hedge, right? And then, of course, that drives these stocks up, which, of course, in turn does what? Drives the Qs up, right? And you see the Q just ran through any kind of resistance last week like a hot knife through butter. That's what happened. And so, and like I said, usually in an Opex week, you'll have one mega down day or something, some crazy stuff. But last week, man, we were just ramping, right? I mean, Friday was barely red. That's what's so crazy about it. But that's the way it works, right? And so hopefully that all makes sense and stuff, and not, put something in the comments and let me know. But the other thing you're seeing happen as well, and it's with tech stocks mostly, but you got some other stocks out there and stuff, is you're seeing, like we like to track in the Discord, is these stage 1 and stage 2, right? So stage 4 is the big nosedive, stage 1's consolidation, and stage 2 is when you'll see them break out of that consolidation, start moving higher, i.e. going into a new bull market or a new upward trend, however you want to look at it. And I use a 30-week moving average. Some people use 40-week, but I just look up Stan Weinstein's 30-week moving average in TradeView, and that's what I use, right? And what you're looking for is to see if it actually, once it breaks out of consolidation, because you're looking for it to be above that 30-week SMA, and is it on the rise? Is a 30-week SMA actually curling up and stuff, right? So somebody had asked me about Palantir, actually a bunch of people did, and so I looked at it, and so, you can see with that huge push, it was consolidating forever in a range. And then you can see that the earnings and the AI push big move up above the 30-week and stuff like that. And if you look at the 30-week, it's trying to curl up right now. It's still early. But again, this is one of those AI type pushes. And because you can see about those candles, massive gap left behind. But usually what you'll see, and be careful, is you'll start to see it start to move back down towards this 200. Doesn't mean it's going to retest it. Usually they will. But in this kind of push we're having, we just don't know, honestly, because we're going euphoric and stuff. You can see right now it's like 55% above its 200-day moving average, excuse me. And you can see if we go back the last time, it would do a breakout. You see, like it's in this range right here. When it broke out, it came back twice, and then it came back below it. And then so the 200 acts as a rubber band, right? So you get too far from it, and you end up snapping back to it. But we'll see. It's not guaranteed it'll come down anytime soon. Just because AI, and I'll show you on a chart tomorrow, it shows all the bubbles, right? And it shows you where you're at in the AI kind of bubble. And bubbles can last 2 years. We know this. We've seen it. We lived through it. And, in 2020, we've lived through it before, and the .com, and lived through it. The real estate bubble from 04 to 07-ish. Right, so we lived them, but I'll show you a chart that shows all of them going back to the 70s, bubbles that I didn't even really know about because I was either not born or I was a kid, right? And so you'll get to see that, but that's obviously you can see what's going on with NVIDIA and AMD and other stocks, right? And so, Google's getting some love on that, but also you got the two FANG stocks that have leprosy or treating like lepers, for the last few months. All of a sudden, big money's like, hey, we left them behind. Let's push them up too. And so that's why you got Amazon and Google pushing through. But you also have, and we'll talk about this more tomorrow in tomorrow's video, when we set ourselves up for the week, you have a lot of stocks coming into major supply, right? So major overhead. Then you have other stocks like a Microsoft. They're within, an arm's distance of being at a new all-time high. Not a new 52-week high, a new all-time high, right? And so I think Microsoft's like 8% off. Nvidia can see their all-time highs. I've showed you on the chart. You know, and so when you get these crazy moves up, we know how the market can stay irrational longer than you stay solvent. I believe that's the saying. And so you just got to keep that in mind and stuff like that. And again, let me know in the comments what you think about, you know, inflation, is it entrenched, right? Or, I mean, it seems to me, maybe it's just me, maybe it's just other people, but that seems to be the case. I think we're going to be stuck between 4 and 5 for quite a while. And I'm talking about really core more than anything else. But, you know, we'll see on that. But anyway, if you got anything out of it, hit the like, subscribe button, guys. I really appreciate you guys who all watch the video and share the videos and support the channel. Greatly appreciated. And for all the people who joined up on the membership, welcome. Good to see you and stuff. And I think forming a pretty good community over there, if I do say so myself. So anyway, hope you guys have a good night. And I'll see you tomorrow. And we'll get the week all set up and ready to go. Have a good one, guys.